Welcome back everybody to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin. In today's video, I have sort of a big update for you regarding cashing out of the cryptocurrency market and just sort of an update on my strategy going forward in July 2021. Keep in mind, I am not a registered financial advisor. This stuff just works for me. Be sure to, like always, check the timestamps down below in the video description because I do want to start with this small piece of fundamental good news for Bitcoin. The recent data tells us that this current price level for Bitcoin has the highest on-chain volume since a $10,300 BTC. So we're setting up some pretty significant support. And for perspective, here's the chart. To be clear, this is the on-chain volume. So it's not the volume on all these centralized exchanges. This is the raw data on the blockchain, starting from when Bitcoin was just $600 all the way to our now local top at around $64,000. And the bars are the on-chain volume. What do you notice? Well, we can see Bitcoin had massive on-chain activity in the 6,000 to 12,000 BTC range. I think that's simply because we spent so much time down there in the bear market. You can see we had the most activity at around a $3,000 to $4,000 Bitcoin. This was our capitulation, our accumulation bottom back in 2020. And of course, where we are now, building some strong support at around a $33,000 to $34,000 Bitcoin. The highest level since around 10,300 during the bear market. Now, what does this mean to you as a regular Bitcoin holder? Well, we are building very strong support at these levels, which is a positive, and as long as we stay above them, that's bullish. Obviously, any support line can turn into a resistance line and vice versa, so we'll have to see, but nonetheless, interesting to see the raw data. Give me your thoughts down below. That does bring us to our next obvious question. If this is right now slightly bullish, what's all this talk of cashing out? Austin, are you selling? I'm not. I think most of you know I bought the dip and I'm hodling. But Bitcoin is in danger of losing that $30,000 level with Grayscale's big GBTC unlocking in 2 weeks. Grayscale accredited investors are about to have their shares unlocked after 6 months. That's the potential cash out. And I just want to explain what that means to you because the fear is that means about 140,000 Bitcoin worth of shares will get unlocked by the end of July, and that's potential sell pressure. Let me explain. This argument concerns the Grayscale Bitcoin Trust, which is the world's largest digital asset manager that allows institutional investors to gain indirect exposure in the Bitcoin market through its product, GBTC. So Grayscale buys the Bitcoin, and then accredited investors buy shares of that Bitcoin, shares in the trust. But here's the kicker. Investors can only sell their GBTC shares only after a 6-month lockup period in secondary markets to other parties. And a lot of investors 6 months ago bought shares in that trust, so that time lock of the shares are about to come to an end. So let's dig a little deeper because it's not just that simple. As you may have seen right here, Grayscale's premium has remained negative for months. So when you buy Bitcoin from Grayscale, it's not simply the asset's regular price. There's either a premium on those shares or the premium's negative. And that premium up or down is just based on where we are in the market. This is a chart of the Grayscale investment BTC premium. These blue and green lines represent the regular market price of Bitcoin and the holdings of Grayscale. But let's focus on this darker blue line. That's the premium. The issue comes around 6 months ago when a lot of those shares were bought. Grayscale, GBTC, was trading at a high premium. Actually a premium of around 30 to 40% extra 6 months ago. Now we're in the negatives. You'd be buying at a discount. So even though the price of the underlying asset, Bitcoin, is actually a little higher than what it was 6 months ago, the premium has drastically gone down. And this is leading to speculation on what all those accredited investors will do now that the lockup is ending. 2 options. They would prefer to liquidate if they want to liquidate at all. They would prefer to liquidate when that GBTC premium is positive, when the market price at the time of the sale is above the native asset value, the regular value of Bitcoin. On the other hand, like right now, liquidating GBTC shares when the market price has dipped below the NAV brings losses. So if investors decide to dump their GBTC holdings, they would have to do so for a financial casualty. That is because the shares have been trading at a discount, i.e. under its NAV, since February 24th, 2021. So let me give you my thoughts, because again, the speculation is that if the GBTC premium pops positive again, that will be an open door for all this sell pressure from these 6-month unlock accredited investors. In my mind, it's not that complicated. We're either going to have a little dip, which to me would be a buying opportunity. Maybe nothing will happen. They don't have to sell. They don't have to buy. They can just hold. Or maybe they'll buy more. It literally does not matter to me. But I did see a lot of questions from you about this, so I wanted to give you my take and sort of disclose my strategy, which really hasn't changed. If I didn't explain something quite right, or you have a comment or an add-on, feel free to ask or comment down below in the comment section. I'll answer, or maybe somebody else from the community can answer, and we can all build each other up together. I'll keep tabs on this, but let's keep moving. Next up, there are prominent altcoins making news in this industry today. Check the timestamps. First, we will start with Vechain. San Marino in Europe approves a blockchain COVID certificate on Vechain. So in other words, the San Marino General Council has approved an incentive for a green vaccination pass that uses Vechain technology and non-fungible tokens NFTs, which will allow citizens and residents to move freely within the territory as long as you have your little digital COVID certificate for your vaccination status. Interesting. If you hold Vechain, you'll love this. You'll love to see the use case on the Vechain blockchain. If you're anti-San Marino seeing your privacy or knowing whether you're vaccinated or not, then you may not love this, but either way, they are using Vechain. The approval was announced on July 1st, where it was explained how the system works using QR codes and non-fungible tokens. The QR codes can be scanned to verify authenticity by linking to an NFT on the Vechain Thor public blockchain. So this is an extra step for verifiability of the vaccinations, and the digital certificates are a portable solution that anyone can potentially verify without the need to download a specific app. In a direct quote from Global Director of Growth and Innovation at DNV, the use of Vechain's blockchain technology, and in particular non-fungible tokens, makes it possible to increase confidence in the authenticity of the information, reducing the risk of counterfeiting. Interesting to see. If you're a Vechain fan, sound off in the comments. Do you like it? Do you love it? Could you do without it? But let's keep moving. Next piece of news for Enjin. Enjin sells $20 million of their new altcoin, their EFI token, in a coinless sale. EFI is the native token of Efinity, a Polkadot-based parachain with a focus on non-fungible tokens. So keep this on your radar, because this is Enjin's play into interoperability one, but also into the Polkadot ecosystem as well. Enjin said there were over 40,000 participants in the sale who purchased the EFI tokens in just 2.5 hours. So the interest was there, and to get specific on what Efinity is, the Efinity blockchain platform supports NFTs from any blockchain, including Polkadot, Kusama, Ethereum, and Enjin's new JumpNet cryptocurrency, and more. And we have discussed before that Enjin is launching 2 new blockchains, one highly centralized but highly scalable, that's JumpNet, and one highly interoperable, that's Efinity. It does sort of make me question, well, what is the use? What does the future look like for the main blockchain, Enjin? And honestly, that's still a question I have. In a direct quote from Enjin CEO, NFTs are the future of digital ownership. Efinity will provide the infrastructure needed to harness NFTs with ease and allow creators to focus on the creative process. Interesting. As I get more information, I'll keep you updated. We will see. That is the video. My name's Austin. Like always, see you tomorrow. Have a great day.